Welcome to the commodity section, and here we're looking at gold. And look, as you know from yesterday, we were looking for the low to come in for gold as wave one, and we're looking for a 50-60% retracement level. And this pattern here is starting to mature quite sort of nicely here. So pretty much taking any sort of weakness that you that you see as a short would be sort of the way to go. Obviously, being under the 1300 here would be the better bet, and also as a sort of retested resistances as well. But it can move higher from here, but not a lot. And while it's above there, consider it positive. And when it's below there, start looking for a way to get in there and short it into the next move down, which should be reasonably quick actually, because wave two. This is wave one, wave two, and wave three here. And being a wave three here, it's a strong wave, so it may not rally that much, but best not to short it while it's above the 1300 there. But all going sort of quite nicely. And just in the 15-minute chart here, we can label as an A and a B. Well, the C wave's not very neat here, but sort of doable, I guess. So this could actually be down for one here, back for two here, and then moving down from here. But that looks corrective here, so I'd imagine that would make a new high above this high here. So look, it may not be finished. This is all support, isn't it? Supported. You want the same picture as resistance, but don't hang around too long, because we'd be entering a third wave down, and you'll start to get sharp moves down. So even sort of setting orders up, at 1294 or something, sort of a bit safer or something on the short side. The copper market has found support as well. Its cousin here. We were looking at this, trying to figure out a five-wave structure to the downside yesterday after this quick breach here, and it's not the case. It hasn't. This little fourth wave here never gave us the fifth wave down here to confirm the larger impulse wave. The current move up here is also in three waves as well, but it looks likely to develop into third wave, fourth wave, and possibly a fifth wave here. If it did come down through here and found resistance here, then we know we're on track of actually continuing to the downside here. Anyway, look, it's just a little bit annoying, but it's still basically sticking to the major trading level 3 here, and obviously being above it puts a bullish bias on it, but finding support on top of group 1 here, which would be the 303 here, would sort of help with the bullish case of making a new high above the 105 and this high here. The oil market, what we've been doing here, if you remember, we've been looking for 5 waves up through here, and we do have those 5 waves up through here now, and we do have this labeled as an A and a B and a C, but also want to be mindful that it could develop into a 5-wave structure here and then move up from here. But even so, if this was a 4th wave here, we would expect to see a bit of a complicated correction, at least in minimum 3 waves here, and then looking forward to move up here. But as it stands, the wave count is for it to move lower through here. But as I mentioned before, I don't want to turn bearish until the 102 here is actually the retested resistance here. But anyway, the idea was to exit at 105, and I hope you've done that, and we'll just wait now for this to play out. This was the 5 waves that we were looking for to the upside, so this can certainly expect sort of 3 waves here as such, like this minimum, so nothing really cooking here just for the time being, unless, look, 104 develops a really good support, then look at 104.30 as a support as well to go long on. The gas market is pulling down further. If we look at this on the 2-hour chart here, this correction is getting quite large here, so I'm sort of fitting into the count here of having 5 waves up and a 50, 60% retracement level into these areas here. So I want to see it. The long trade here, if it's going to happen, will be a breach of the 450 down into the 440 area here, 445. and then finding support back up here on the 450. So there's a fair bit of time to go for that. This does count as an A and a B and a C wave down to this point here, and this means that that can be up for 1 here, an A and a B and a C for 2 here, and it can move straight up from here, but long as it doesn't breach that low there, that count is viable. So looking, if this market does move up into this area up through here, then look for support in this area here, and just glean a very small amount of contracts with the view of adding at 460 support and so forth up through here, if that's going to be the case. The soybean market, we were looking for it to move to 1520. It's done that. It can certainly move higher in from this fourth wave to the fifth wave at 1530 there. This move down here being a fourth wave, I put the fourth wave here, but look, that may not be the case either in terms of the correction here. Just may get a bit larger in terms of 5 waves down here. There's an A wave, a B wave, and a C wave coming back through here a little bit. So any long trade here would need 1520 as a support. So that's what you'd be looking for there. We're still looking for the first high above the level here and counting 5 waves up. So we're looking for a top above the 1500 here. So consider any trades to the upside to be, short term. The wheat market, we're looking to go long here. We've got positions in here, and that's all fine. And we've actually got 3 waves up here, so it can be an A and a B and a C wave here in 5 waves. That's okay. Now, but what I do want to see here on the long side is, and we're getting what we expected, is that we basically want to see a corrective pattern across here, and this would be the first swing down here, we want to see some sort of corrective pattern across here, and then we want to see support. That will give us our long position, our second long position at support on 700. It would also confirm the further upside there as well, because as it stands at the moment, that move up through here is corrective, an A and a B and a C wave here, so this can come down to here, go back to there, and then move down through here. You can quite easily do that. That's why that support on the 700 is critical for adding 2 positions. The corn market, look, doing pretty much what we expected it to do in terms of, still moving down for wave A here and part of a larger A, B and C correction across here. So nothing cooking here just yet. The coffee market, we were looking at this yesterday and the sharp move here. So look, it's never made a new high above here, so we have to label this an A and a B and a C wave to here as the B wave. So from wave 3 here, an A and a B and a C wave for wave 4, and then we're still looking for the first high above the level, and then we're still looking for the ABC correction after that as well. So like corn, it's a fair way off yet. I thought we may have been a little bit closer to it, but it's just extended back out. So moving down, it will find support down here, as will the London market at 200 as well. London coffee, this is US coffee, but London coffee should find support at 200, and that will give us a support at 172 here. The sugar market, look, as you may know if you've been following this, we were looking for a low into this area through here, and this sharp bounce off here in 5 waves, well, it appears to be in 5 waves, helps cement the low in here that we were looking for. So with that in mind, we can have a buying proposition emerging. So we need to see a little bit more evidence, and just on the 15-minute chart here, we were looking at, I thought this may have also had the possibility to come lower through here, and but it hasn't, but it's still a good fit, because from wave 4 here, we've got down for wave 1, ABC for 2, 5 waves down for 3, then 4, and then 5 here. So 1, 2, 3, 4, and 5. So it fits quite nicely. And this little bounce here appears to be in 5 waves here. Nice little gap in the 3rd wave here, all tickety-boo. So what we're looking for now after 5 waves, we're looking for an A wave, which is the move down here, then the B and the C wave here, and then we'll look for a move up here. So I was thinking that we could start gleaning positions, well, maybe on 1680 or 1672 here, if that's the case, but definitely on 1700 here, $17, 1710, 1720, and 1730. We really want to build it in through those areas there, okay, if that's going to be the case. So, let's focus on this one here as well. Definitely oversold at this price point here on the daily. So, and we've been seeing a larger correction come to the upside here. If I can just weave back in here. So this was the situation here on the daily chart without going too much detail. An A and a B and a C wave finishing in here, and then looking for a move up. So if we've got this right, we would be looking for a 5-wave sequence going up here to $20. That's where we'll be heading off to. Let's see if it gives us the right signals and setups through here. And the idea is not to shovel the money in, but just to put small positions in so we can handle any pullbacks and swings and so forth. A bit like we did with soybeans early in the year. Orange juice. Okay, orange juice is look, it's got a lovely pattern. It's doing everything that we expected it to be doing in terms of Elliott and the levels. And, at 165 is the lower level within group 2, 65, 72 on the 80. And if it gets support in here, which it will, then, we're just going to keep moving up. So, look, the idea is to get another position now at 165. Okay, so that's all good. We can see that if I can just draw this out here for us. So we've got wave 1, 2 here. That's all good. And then we've got wave 1, 2, 3, 4 in here somewhere. I haven't pulled it apart. It'll be 5 here. So that will be just the third wave to here. Okay. Then we'll get the fourth wave. Can pull back to the fourth wave of 1 lesser degree. So don't overtrade. And then we're looking for wave 5 up to 172 there. Be looking further up in a bigger picture, but that's all good. We're going higher than that, but just keep building into those points there. Alrighty, well, that's it. So thanks for listening, and enjoy Easter.